Hey everyone, welcome back to Corporate Decoder, the place where we spill the tea on corporate filings. And today we've got GenFlat Holdings Incorporated, and let's just say their latest filing might make you want to sit down. Get ready, because this is a wild ride through the world of collapsible shipping containers. Before we dive in, if you love getting the real story behind these official documents, make sure to hit that subscribe button. And hey, we've got a growing community discussing these filings over on our Discord server, linked in the description below. So join us. Alright, so GenFlat Holdings Incorporated, formerly Healthcare Business Resources Incorporated, is trying to make a big splash in the shipping container industry with their collapsible containers. Think of it as a Tetris game for empty containers, saving space and money. They're trying to raise about $15 million in this offering, assuming the underwriter doesn't exercise their extra share option. The planned NASDAQ listing is a big deal for them. They really want to move off the OTC Pink marketplace. Now, let's get to the numbers because that is where the real story usually is. When we look at their financials, GenFlat is still very much an early stage company. For the 3 months ending the 30th of September 2025, they reported revenue of $6,120. Now that might sound tiny, but it is actually a decrease from the same period last year. When they brought in $7,894, this indicates their revenue stream is still very small and fluctuating. For the year ending the 30th of June 2025, revenue was $7,894, which was an increase from $5,234 in 2024. So while showing growth is good, these numbers are extremely low for a company seeking to expand. Their cost of revenue for that 3-month period was $21,070, which is significantly higher than their revenue, meaning they lost money even before considering other expenses. For the full year ending June 2025, their cost of revenue was $177,279, again far exceeding their revenue of $7,894. This shows their core operations are not yet profitable. Then we have general and administrative expenses, which include things like salaries and professional fees. For the 3 months ending September 2025, these costs were a staggering $485,464. This is a massive jump from the same quarter in the previous year, where it was $1,685,747. Wait, that's not right. Checking again. For the 3 months ending September 2025, general and administrative expenses were $485,464 compared to $1,685,747 in 2024. So there is a significant decrease there. They explain this decrease was mainly due to a drop in stock-based compensation, which is a bit of a relief, but still, these operating costs remain very high relative to their tiny revenues. And this all adds up to quite a bit of red ink. For the 3 months ended September 2025, their loss from operations was $500,414. This is a big improvement from a loss of $1,767,047 in the prior year's comparable period, but still a significant loss. For the full year ended June 2025, the loss from operations was over $4.7 million. A substantial increase from about $1.2 million in the prior year. This company is burning through cash. Now let's talk about the risks, because there are a lot of them. Their own auditors have expressed substantial doubt about the company's ability to continue as a going concern. That is a serious red flag, folks. It means the auditors have serious doubts they can stay in business for the next year without more money or a massive change in performance. They've also incurred a big accumulated deficit, meaning they've lost a lot more money than they've made since they started. This phrase really sums up a huge chunk of the risk section. They are upfront about being early stage and that their business plan might just not work out. They're trying to sell and lease these containers, but they've had minimal revenue so far. The success of their business hinges on whether customers actually adopt these new containers. And that is a big if. Another major concern is their reliance on a single supplier for manufacturing their containers in China. This is a classic risk for any business. If that supplier has problems, faces trade issues, or even goes out of business, GenFlat could be in serious trouble. Plus, the concentration of manufacturers in China means they don't have a lot of leverage if things go wrong. Looking at their stock, they have common stock and the details are important. Holders get 1 vote per share, which is standard, but critically, their certificate of incorporation and bylaws have provisions that could make it harder to take over the company. This can sometimes discourage potential investors who are looking for companies that aren't overly protected against change. This table shows us what the company's financial structure looks like. As of the 30th of September 2025, after accounting for the proposed offering, their cash would jump significantly from about $31,000 to over $13 million. That is a much needed boost. Additional paid-in capital, which is basically money from selling stock, also jumps dramatically. This shows how much they're relying on this offering to fund their operations moving forward. And here is the classic dilution warning. If you buy shares in this offering, you're likely to experience immediate dilution. That means the value of your ownership per S-share will be less than the price you paid, because the company's book value per S-share is so low. They estimate an adjusted net tangible book value of about $1.01 per S-share, while the offering price is around $5.5. That's a lot of dilution right off the bat. They're basically saying that your initial investment might be worth less instantly due to existing shareholders' lower basis in their shares and the company's own accumulated losses. In their own words, they're an early stage company with a plan to revolutionize the market. They explain their strategy to replace standard containers and highlight their patent and manufacturing partnership. They started commercial operations in May 2024, and since then, they've secured a few lease agreements, which they see as proof of commercial acceptance. They are also talking about a $400 million qualified sales pipeline, but they are very clear this is not guaranteed revenue. They are estimating about 28% of that could convert in 2026 and another chunk in 2027. But this is based on management's best guess, not hard data, because, well, they don't have much of an operating history. This section tells us how many shares could flood the market. After this offering, there will be about 13.9 million shares outstanding. A good chunk of those are restricted and can't be sold immediately, but they will become available over time. This is important because a large number of shares becoming available can put downward pressure on the stock price. This part is for our international viewers who might be considering investing. It basically lays out how taxes might work for them if they buy GenFlat stock. The key takeaway is that if the company pays any dividends, which they don't currently plan to do, there could be a 30% withholding tax unless a tax treaty says otherwise. For most investors, the main thing is to talk to a tax advisor if you're not a US person. Here is where they talk about the deal with the underwriters, Craig-Hallum Capital Group Incorporated. They're the ones selling these shares. The underwriters get a discount on the shares they sell, and GenFlat is also giving them warrants, which is like a ticket to buy more shares later at a set price. This is pretty standard in IPOs, but it does add to the dilution for existing shareholders. And finally, the exhibit index. This isn't something most people pay attention to, but it is a list of all the other important documents that are part of this filing. It includes things like their employment agreements, their lease agreements, and more detailed legal documents. It's basically the appendix to the main report. Now, let's wrap this up with my take. GenFlat Holdings Incorporated is in a fascinating space with a product that addresses a real problem: the cost and inefficiency of handling empty shipping containers. Their collapsible container solution has the potential to save companies a lot of money and reduce environmental impact. The strategic partnerships and awards they've highlighted show some validation for their innovation. However, the financial picture right now is concerning. The auditor's going concern opinion is a major red flag, and their revenue is extremely low compared to their operating expenses, meaning they are highly dependent on this offering to stay afloat and fund future operations. Their reliance on a single Chinese manufacturer is also a significant risk. The potential for dilution to new investors is high, and the path to profitability is long and uncertain. GenFlat is clearly a high-risk, high-reward investment. If they can successfully scale their operations, gain widespread market adoption for their containers, and manage their costs effectively, they could indeed disrupt the industry. But the risks, especially the financial ones and the operational reliance on their sole supplier, are very real. They need to demonstrate a clear path to turning those massive losses into profits, and that is a steep climb. So, what's your opinion on GenFlat's future? Do you think their collapsible containers are a game changer, or is this a bet on a company still struggling to find its footing? Let me know your thoughts in the comments below. If you found this deep dive valuable, please give this video a thumbs up and subscribe for more analyses like this. And don't forget to hop into our Discord community linked in the description to keep the conversation going. Thanks for watching, and I'll see you in the next one.